Hello guys, I'm Paris, the options guy, and welcome back to the No BS Trading Podcast. This is episode number 29. I hope you guys are doing great, but today is going to be a very busy episode because we have a lot of things to talk about. Starting off with how we were finally proven right by the markets. Yes, the Fed has finally accepted that inflation could be a problem in 2025, and I'm going to talk about that in a bit more detail in just a few minutes. But then we are also going to talk about the 9 new IPOs that are coming in our markets. 9, can you understand? That would probably be a world record of most number of IPOs opening in a single week. But yes, without any further delay, let's just start with the episode. And one more thing, guys, if you see a little bit of glare in the video, please do excuse that. My camera lens just broke today and I could not fix it in time. So yeah, I will definitely make sure to fix that ASAP, and probably by next episode things will again be all right, the video will again be all right. But yeah, the sound is fine, everything else is fine. So yeah, let's just start with the episode without any further delay. Starting off with what happened in the previous week, we had first of all the US retail sales data on Tuesday, and it came out at 0.7% on a month over month basis. The expectations were 0.6%, so that means a little bit higher than expected. And as I had said, that if the retail sales data comes out higher than expected, then what we can see is a flare up in the inflation. This can help inflation go back up again, because basically if you have higher retail sales, that means people are buying more, which means there will be more inflation, right? And that is what exactly the Fed may also have said in its interest rate decision, but I'm going to talk about that in just a second. And then on Wednesday we had the Fed interest rate decision. Now it was expected that the Fed would cut interest rates by 0.25% or 25 basis points, and yes, they did that. They cut interest rates by 25 basis points, but that was not the breaking news of the event. What was the breaking news is the summary or the other things that the Fed said with the 25 basis point cut, because that is what really like shake basically move the markets a lot, and for the bad reasons. Okay, so I'm going to tell you a few things that the US Fed said. Okay, the US Fed has revised the end inflation of 2025, basically inflation at the end of 2025 projection, from 2.1% to 2.5%. They have increased their inflation expectation. They are not expecting that inflation will go below their 2% target. It will stay higher, and they still decided to cut interest rates. Now you tell me, how does that make sense? You tell me how that makes sense. If you have any sort of answer to this, I would be glad to hear that from you. But I cannot think of anything, like any reason why the Fed would do this 25 basis point rate cut if they're expecting higher inflation for 2025, right? And then one more thing is that the Fed median forecast now shows only 2 rate cuts in 2025. So that means previously the US Federal Reserve, the members of the US Federal Reserve were expecting 3 rate cuts in 2025. Now they're expecting only 2 rate cuts in 2025. That means one less rate cut, right? And then the Fed sees unemployment at 4.3% at the end of 2025. In my opinion, unemployment should go much higher than 4.3%, but the Fed always thinks that they know better than everyone else. But time and time again, even if you just look at what happened in 2022, the Fed said that the inflation was transitory, the inflation was just temporary, it will go away. But what happened? Inflation went from basically lows all the way up to 9%. 9% inflation. Do you understand that? That is a huge inflation for especially US, right? And then the Fed is now saying that they are seeing unemployment at low levels in 2025. But in my opinion, I don't think this will really pan out well for the Fed. I think unemployment will also rise in the coming few months. But anyways, after that, what happened also was that the Cleveland Federal Reserve president. So Cleveland is a state in US. The Federal Reserve president of that state, Beth Hammack, dissented. So basically she was against this 25 basis point rate cut. Now whenever a Fed member dissents from any sort of decision, this is indicating that things are about to get a bit dirty. And by a bit dirty, it means that not everybody is on the boat with the idea of rate cuts in the Fed, and this will make it harder for the Fed to cut rates. If enough people go on the right side of the boat, that is no rate cuts, then you will definitely see no rate cuts, right? So even the Fed members are starting to think that maybe rate cuts are not such a good idea right now. And I've been saying that in the past few episodes also, since the Fed cut rates by 50 basis points, that cutting rates at this point just does not make sense. And I think surprisingly the Fed is waking up to that reality right now, and they've still not woken up, in my opinion. I think they will still need a few more like big, like you can say jhatkas, so that they can get up from their sleep and finally realize that inflation is going back up. We should not cut interest rates. Anyways, one Fed official also sees that they do not see any rate cuts in 2025. That is also a very interesting point that you should note. So definitely, after that also, one very funny thing that I heard from Jerome Powell is that inflation is much closer to the Fed's 2% target. Now you tell me, is inflation really as close to Fed's 2% target? I mean, sure, the core CPI numbers, the CPI inflation numbers is close to 2%, but on every other metric, inflation is much, much higher than 2%. Just, look at any other metric, be it core CPI, be it super core CPI, be it PPI inflation and all that. Actually, not PPI inflation, but, if you look at even just the basic other things in the economy, right? Just look at the transportation inflation in US. It is at 18% YOY. 18%. That is just huge. Okay. And so what I would say is that the CPI numbers are not really reflecting the true reality, the ground reality. And inflation is probably much higher than what we are seeing in these numbers that the US government is releasing, more specifically BLS. The BLS is Bureau of Labor Statistics, and it is the organization that calculates and releases these numbers. And I think their methodology definitely has a little bit of a problem, because of which you're not really seeing the ground reality of inflation in US. And if you really go on to calculate the inflation, really, like, I mean, considering everything, you will probably find inflation to be much, much higher than what everybody is seeing. So this is what happened in the previous week. And then on Friday also we had the PC inflation numbers, and a sort of like a relief to the market, that came out slightly lower than expectations. Now expectations were that PC inflation will come out at 2.5%, right? But it came out at 2.4%. But still, even at 2.4%, it means that PC inflation has risen for the last 2 months. Okay, so yes, the market has taken this PC inflation number positively, but still it is not really a very good number, right? You might think that this is a good number because the market reacted positively, but in my opinion, that is a little bit of just a short-term positivity after the very huge negativity that the market saw on Wednesday. Okay, so yeah, that is what happened in the previous week. Now let's move on to what is going to happen in the next week. Now talking about what is going to happen in the next week, we don't really have anything to talk about because next week it is Christmas, so probably everybody is in a bit of a holiday mood, because of which we don't really have anything to talk about. The Christmas is on Wednesday, so Indian markets will be closed, so will be all other world markets mostly. So yeah, that is it for the next week. But now let's move on to the IPOs that are coming in our markets next week, because that is going to be a very busy place. Now, out of the 9 IPOs that are open in our markets next week, first of all, let's talk about the IPOs that you should apply for listing gains. So, which IPOs are good for listing gains only? So, out of the 9 IPOs, these 5 IPOs are very good for listing gains, and those are Transrail Lighting, DAM Capital Advisors, Mamata Machinery, Senores Pharmaceuticals, and Unimech Aerospace and Manufacturing. So, these 5 IPOs you can look forward to applying for listing gains. Now, out of these IPOs, if let's say you have only 15 to 30,000, then which IPOs should you focus on more? So out of these 5 IPOs, the most which you should have the most focus on, the IPO which you should have most focus on is DAM Capital Advisors, because it has not such a huge number of subscription like Mamata Machinery, but it still has a very good very good gray market premium. So that means you still can get a good profit from the IPO. Whereas in Mamata Machinery's case, the gray market premium is above 100%, which is excellent. But what is really sad is that the subscription is very, very high. As of now, the IPO subscribed 50x already, the retail portion. So probably by the end date, it will probably be subscribed by 80, 90 or 100x. So chances of you getting allotted in Mamata Machinery is way lesser than you getting allotted DAM Capital Advisors or also Transrail Lighting, right? Because Transrail Lighting also has similar subscription as compared to DAM Capital Advisors, but it has slightly lower gray market premium. So if you want to apply to the IPO only 1 or 2 IPOs, then you should focus more on DAM Capital Advisors and Transrail Lighting. These will be your 2 best bets. But now let's move on to the IPOs. Now let's move on from the investment perspective. Should you apply to these IPOs or to this? Should you invest in these companies? And so let's start from Transrail Lighting. Now I'm going to tell you just a summary of the companies. This week I cannot really go into a very in-depth detail of the companies, because if I do that, the podcast episode will probably be 2 hours long, so we don't want that, right? But anyways, I'll go through the summary and then I'll tell you my final remarks, right? If you find the IPO good, then you can definitely research more about it. You will get many videos and many articles on the internet talking about each IPO, right? But let's start with Transrail Lighting. Now, it is an engineering and construction company focused on power transmission and distribution, right? It also provides railway services like overhead electrification. So you must have seen those electric wires going above railways, right? So it does that also. It provides that service of providing, like putting those overhead wires and stuff. Then it also provides signaling, telecommunication, earthworks and track lining, all of that stuff also. The revenues have gone from 2300 to 4100 crores in the last 3 financial years, and the PAT has also gone from 64 to 233 crores in the last 3 financial years. So a very, very good growth in the last 3 financial years. Overall, a very good company which you can apply to, because it also has very bright prospects. Okay, so now let's move on to DAM Capital Advisors. Okay, the company is into investment banking. Okay, so it provides capital market services such as going for IPO. If a company wants to go for IPO, or if a company wants to does OFS, offer for sale, and all that stuff, it can help the companies do that. Okay, so it has actually done 27 IPOs, I think, in the last 3 years, if I'm not wrong. So that is a good thing. Now it also does mergers and acquisitions, private equity, structured finance. Some companies do restructuring of their financials and all that stuff. So it also helps the companies in that. It also provides equity broking and research services to institutional clients, not normal clients, institutional clients. Okay, it has the highest growth rate and profit margins in the whole industry of investment banking in India. Okay, so overall, this is a great company which you can invest in for the long term, because the overall investment banking industry still has a very good growth, you can say, potential in India. So now let's move on to Mamata Machinery. Okay, so this company manufactures and exports machines which are used for making plastic bag pouches, packaging material, and all that stuff. Okay, so its main clients are from the FMCG and food and beverages industries. Okay, the company is good, but the growth prospects are not very, very bright. Okay, so yes, the company will grow in the future, but in my opinion, the growth prospects are not as high as, let's say, DAM Capital or Transrail Lighting. Okay, so if you do get the IPO, consider exiting majority of your investments, because if you do get the IPO, the company will probably get listed at 100% gain. So you're already getting 100% gain, and at that price, the company will be very expensive. So if you get the IPO, consider exiting majority of your investments and hold a little bit for the long term. Okay. So now let's move on to Sanathan Textiles. Okay. The company is a manufacturer and a global supplier of polyester yarn, cotton yarn, and technical yarn. Okay. Now what is technical yarn? It is used in different stuff such as making safety gear and automotives and all that stuff. Okay. Basically, aside from clothing, wherever yarn is used, it is called as technical yarn. Okay. The company has faced inconsistencies with its growth in the last 3 financial years, and it also may face some inconsistencies going forward because due to climate change and all that stuff, because sometimes weather patterns can affect the growth and cultivation of yarn, because of which this company may also face those disruptions. However, one thing which is good is that the government's PLI scheme can be a big benefit for the company going forward, because of which it might also get a good boost in its revenue and net profit. So if you have a very big portfolio, and if 15,000 rupees is a small part, is a small or a tiny part of your portfolio, then consider investing. But if your portfolio is, let's say, like of 1 lakh rupees, and this company, if you invest in this IPO and you get the IPO, and you have 15,000 worth of shares in a 1 lakh rupees portfolio, then this is a bad thing. So if you can make this company a small part of your portfolio, then you can definitely think about investing. But aside from that, don't give it a lot of weight in your portfolio. Okay. So now moving on to Concord Enviro Systems, whatever you want to say. The company provides water and wastewater treatment solutions globally, okay, to basically a lot of global players. Okay. So it has solutions across entire value chain, which includes design, manufacturing, installation, operation and maintenance of the solutions that it makes, and also digitalization. However, the company is currently showing poor operational performance, because of which the the profit after tax of the company is very jittery. So it sometimes goes into profit, then it goes into very less profit, then again into profit and all that stuff. At the same time, if you see, the revenues are fine, but the PAT is very bad. So as of now, you should not invest in the company. So rather, what you should do is revisit the company in the future, maybe 1 or 1.5 years later, and see how the company is doing then. If the company is then doing fine, then you can definitely think about investing, because this sector is a pretty good sector, and the company is also in a bit of a niche space. So this gives the company a bit higher potential for growth, okay, as compared to normal you can say normal basically like manufacturers and installers of such you can say like water treatment companies. Okay, so that is it. Now let's move on to Ventive Hospitality. Okay, so this company is into the business of developing and maintaining high-end luxury, you can say, hotels and resorts, and this company mostly targets the business and leisure segments. Okay, so the business class, so if let's say you can say a company wants to do a business trip, so this company Ventive Hospitality will focus on those type of people who are onto business trips and all that stuff, right? Who want to do major meetings at big places and all that stuff, right? So you must have seen in the movies and stuff, right? So this company focuses more on that and not on the general like your normal consumer. Okay, so the company has seen good growth in its revenue, but it is still not operationally profitable. So profit after tax is actually profit after basically loss after tax. So the company is still making a loss. However, the loss is not very big. It is slightly the profit after tax number is slightly hovering below break even. Okay, so it is better to not apply to this company at this valuation, or invest in this company at this valuation. Rather, what will be a better better thing is investing in this company if you get the shares near 400 to 450 rupees per share. Okay, so as of now, don't invest. If you however get these shares in a correction, then this is a good company to invest in. Okay, so that is it. Now let's move on to Senores Pharmaceuticals. Okay, this company develops and manufactures various pharmaceutical products which are mainly sold in the regulated markets of US, Canada, and UK. So basically selling to the developed countries of the world. It, however, has presence in the emerging countries also, but not as much as the developed counterpart. Okay, it has seen an extreme growth in its revenues, going from 14 crores to 217 crores from FY22 to FY24, and in the same time period the net profit has gone from 1 crore to 32 crores. That's a 320 that's a 32x increase in the revenues, in the net profit. And this growth is slightly shady in my opinion. Okay, because growing so fast cannot, it's like sometimes it is a bit shady. And so what you, considering everything, what you can do is parking a small percentage of your portfolio in this company. Don't put a big percentage of your portfolio in this company as of now. Okay, invest a small percentage, but don't invest a big percentage. Okay, now moving on to Carraro India. Okay, the company is engaged in manufacturing of transmission systems, mainly for agriculture and construction equipments. Okay, and for off-highway vehicles, and it also however produces tractors, so full-scale tractors, not just parts for tractors and all other stuff. Okay, the company has shown steady growth in its revenues. However, the profit after tax margins of the company is just at 3.5%, which is very low in my opinion. The profit after tax margin should be much higher than this for a company like this. Okay, so considering the future growth prospects also of the company, which are not like very high, I would say it is better to avoid this IPO. There are much better companies in the market than this, which you can definitely look forward to applying. And then at last we have the Unimech Aerospace and Manufacturing. So this company is engaged in the manufacturing of complex tools like mechanical assemblies, electromechanical systems, and components for aero engine and airframe production. Okay, so it is involved in machining, fabrication, assembly, testing, and creating new products based on the specific requirements of its clients in the aerospace, defense, energy, and semiconductor industries. Now, this is an important point. Its clients are in aerospace, defense, energy, and semiconductor industries. All of these industries have very good growth prospects for the future. So this is a very good thing, that the company is operating in industries, or that the company is servicing clients of industries which have good growth prospects, which means the company's business can also continue to increase, or the company's business also has good growth prospects for the future. It has seen actually a very good and consistent growth in its revenues and net profit in the last 3 financial years. You can go check it out on any website. And considering everything, in my opinion, it is a very good company to invest in for the long term. For the short term, you might face a little bit of hiccups, but for the long term, definitely a very good company that you should look forward to investing. And somehow we've covered all of the 9 IPOs in a summary. Okay, now as I said, that go ahead and research the IPOs a bit more if you are interested in any one of them. So which IPO should you apply to? I will tell you just the names. Unimech Aerospace and Manufacturing, a good IPO to apply to. Then you have I'm really sorry. Then you have another one which is DAM Capital Advisors, which is also good. And then you also have Transrail Lighting, which is also good. So these 3 IPOs are very good to apply for. Mamata Machinery is actually a much better pick for listing gains than for investment, but you can apply for both of those purposes, no problem in that. Okay, so I hope you guys understand what you need to do for the IPOs for the next week. And as I said, that research a bit more for any IPO that you're interested in, right? But yeah, that was it for the IPOs. Now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Nifty over here moving down 4.7%, and mostly because of a little bit of an initial weakness in the first half of the week. And as I said that below this, we until we go below 24,200, we will not be really bearish. But what made things more bearish was the the basically the Fed interest rate decision and what the US Fed said, right? Because of which, if you see, the US markets also crashed heavily on Wednesday, right? And because of which we opened with a gap down also, and continued to move down throughout the day, right? On Thursday and then on Friday also. So because of this, now the markets have become very negative, and now we are at a very crucial point, and I'm going to tell you these crucial zones which, if they are violated, there is a very high chance that we are open to a very big downside both in Nifty and Bank Nifty. And one thing which you will see in Bank Nifty is that we are now seeing a making of a little bit of a head and shoulders pattern in Bank Nifty. Not a little bit, but like a proper head and shoulders over here, if you see, right? The market went up over here, right? Made a new high and then came back down, and then again, basically the right shoulder that is being made. And yes, it is not completely perfect, but a pattern is no pattern is completely perfect in the market, right? So right now, the level which you need to watch out for will be this zone of 49,500 to 49,700. If we break this zone, then chances are that markets will probably give us an easy 2,000 point fall. Okay, Bank Nifty will give you an easy 2,000 point fall from here, and you can easily expect the markets to come near 47,000, and then probably 46,500 to 47,000, and then probably go down even more if we don't take any sort of support over there. Okay, talking about Nifty over here, if we see, for Nifty, the major level is much closer, and that is 23,350. 23,350 to, you can say, 250 to 350. Okay, this 100 point range. If we break this zone, okay, then for Nifty things are much worse, because the next proper support is near 21,800 to 22,000. That is the next proper support, and that is where the markets will stop if we break this zone. Okay, so now, what should you do? Very simple. Just look at what is happening at this zone. The zones that I told you. If the market is not settling at those zones, and if the market is seeing a very good buying, then we have some hope that probably market is going to, maybe at least consolidate over here and not go down. But if the market is just staying near the zone itself, okay, if the market, let's say, comes down near Monday, by Monday or Tuesday and all that stuff, and stays near this zone for a few days, then chances are that markets will break this zone and we will go down fast from here. Okay, because if the buyers are really active in the market, what will happen is that you will see a good buying coming from this area. Okay, but if the buyers are not really interested to buy at this point, then markets will probably consolidate in this area and then fall down again from here. Okay, so talking about Bank Nifty now, Bank Nifty is still a bit more far away from that zone. So chances are that Bank Nifty will come near this zone and still take a pullback. It is not so much sure for Nifty, but for Bank Nifty it is, because the sellers have been selling from this point. So anybody who would have sold at this high point, or even at this point, or even at this point, they will think about booking their profits for once, because of which you'll see a little bit of pullback. But what you need to see is that, is this pullback sustaining, and are we continuing to move higher from here, or are we against, just, probably consolidating over here? Because if we are just consolidating near this zone over here, then it means that the buyers are not interested, and we will probably see more sell off to come from there. Okay, so I hope you guys understand what you need to do in Bank Nifty. Now that was a daily view and the weekly view. Okay, now let's move into 15 minutes and see what you can do on Monday. Okay, so I'm sorry. Yeah. Let's move to 15 minutes and see. Okay. So on Monday, probably we'll open with a gap up, because Dow Jones, Nasdaq, and all these indices are pretty bullish over here. Okay. They are seeing a good retracement. And why this retracement is happening is because there is a huge, basically, you can say, expiry of options today in the US markets, and it is skewed very heavily on the bullish side, right? Because of which you are seeing a good short covering in the market also. And additionally, the PCE data was also a bit positive for the markets, because of which you are seeing a bit of a, you can say, short covering move happening in the markets. Okay, but this will also enable our markets to open with a gap up. Okay, now where do we open with a gap up is where do we open is important. So if bank nifty opens near 51,000, what we will do is we let the markets go up a little bit more, and anywhere between 51,200 to 51,400, this area you guys can go ahead and take a short position again, and chances are that markets will probably again start to go down, because the way the markets have closed, it looks like markets are not still going to take any sort of a pullback from between. Okay, so probably markets, it looks like markets will go down till 49,500 or 50,000, and then maybe think about taking a pullback. So as of now, what we need to do is keep a sell on rise stance continued in the markets over here. And so 15,200 to 400 will be an excellent level to take a short position at, and any sort of a breakout failure or any sort of buyer trap that you see being made in the market, you guys can go ahead and take a short position even at that point. Don't wait for the exact levels to come. So I'm going to give you a very simple example. Let's say if we open somewhere near 51,000 over here, and we start to make a higher high in the let's say first 20 minutes. Okay, and if we are seeing that market made a higher high, went up, and then has started to make a lower low over here after inviting all the buyers at this higher high, then you can go ahead and take a short position even over here, right? Because then the market will trap all the buyers who would have bought at this higher high, and then the markets can start to start dumping from there also. Okay, so I hope you guys understand that also. So any sort of negative price action that you see at higher levels, you can use it to take a short position in the markets. Okay, now talking about nifty. For nifty, the levels are a bit far away, but still we'll talk about those. Now chances are we'll open near 23,750, 800 at max. Okay, so this area is not the best area to take a short position. Rather, the best area to take a short position will be 23,950 to 900. Okay, in this area, if you somehow get the markets, if the markets retrace a lot, and in this area if you get the markets, you can think about taking a short position. This is a very great area. But if the markets do not give you such a big pullback over here, okay, so what should you do is very simple. 23,800 to 850 will be your next area. Okay, and this area is also good enough to take a short position in. So if you see markets starting to make negative price action and seeing good selling coming from 23,850 to 800, you guys can go ahead and take a short position even from that area. Okay, so we will continue to keep a sell on rise stance at least for Monday. Then if things change, then we might change our stance over here, right? So I hope you guys understand the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate it. And if you have any suggestions for the podcast, if you want anything changed or added, do let me know in the comments, or you can also DM me on Instagram, LinkedIn, or anywhere else, and I will make sure that I can and I will try to make those changes in the podcast. But yeah, I hope you guys had a great time listening to the podcast, or I hope you guys learned something new from the podcast. But yeah, I will see you guys in another episode in another week. Bye bye.